Mr. Loo, with all these things that are happening in the world, how would the S&P 500 end this year? It's going up, down, up, down, 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 giving a lot of volatility. But how would it end this year? Well, I don't really know the answer, but I know someone, who thinks he knows the answer, and he's well respected, a guru in the financial market globally. And this is what he says. Let's watch on, shall we? These are my usual disclaimers, and let's go. So Tom Lee, a Fundstrat Global Advisor, Managing Partner, and Head of Research, is a guru by now world standard. He has regularly predicted correctly all the S&P 500 movements for the last 2 years since 2022. And he predicts that, the S&P 500 will hit 6,000 points by end of this year, 6,000 points. And I think that's a pretty insane prediction. I must say that so far, he has got a lot of rights than wrong. But to say 6,000 points, I think let's see what he says, right? To build up this case to a 6,000 points. As I said, Tom Lee has been a pretty amazing analyst. He has made a lot of prediction that's been correct, right? And for the last 2 years, all the things he has said against everybody's prediction has been spot on. He believes that when the whole market was crashing, he believes the market would turn around, and it did. And when the market was rolling up and down, he says that you will hit a new high, and new high, and new high. And every time when he say it did, it did. But this time around, he actually said that the S&P 500 will hit 6,000 points by end of this year. It's kind of pushing the limit of prediction, and I really want to see why he say what he say. Well, one of the main reason he says is that right now there's a lot of money at the money market. So the money market right now has over $1 trillion in the money market. That's despite the Federal Reserve cutting interest rates. So all these funds will soon have a much lower interest rate, and this means that they will start seeking returns elsewhere. So when this whole $6 trillion of funds start moving out from money market, which is from fixed deposits and so on, or fixed deposit equivalent, they have to seek returns from better places, right? And one of them clearly is the equities, right? So it's either money market or equities or something else. So we believe that a big chunk of it will come into the equities market, and this will drive the entire S&P 500 up. Not to forget, the Federal Reserve has somewhat indicated that there is still likely to be a 0.5% basis point cut for this year. So if they cut by another 0.5 basis point, it means that they have cut by a total of 1% point. And that's quite a lot of interest rate cuts for this year. If it is so, then I will see some movements out of the money market, and maybe Tom Lee, whatever he say, might come true. For me, 5,700 points right now that we're seeing is already a big bonus, right? It's really stretching beyond my wildest imagination. At that point in time, we're all looking at above 5,000 points was already a plus. Then, hitting 5,200 points was a bonus. Then 5,003, 5,004. When he says, 5,006, I think was a bit of a stretch. And we did, and not only was it a stretch, now he has hit 5,700 points. It's already a big bonus for me, right? Way beyond my wildest imagination that in these 2 years, he has stretched the S&P 500 by so much. Just to recall, most of my shorts were fired in 2022. And this time around, I was very public about all my shorts. I took screenshot of it and fired when the market was so low and everybody was so negative about it. And it was just a period where we keep firing and firing and firing. Not just myself. I think there's a lot of followers that did the same thing. And that was at 3,800 points on average. Some slightly above, some below and things like that. But I think on average, we fire around 3,800 points. So from today's 5,700 points, looking back at 3,800 points is really a huge quantum leap, really. Huge quantum leap. So I think it's kind of difficult to imagine now hitting 6,000 points, right? It's almost hitting a double already. So I think that's quite a quantum leap from current levels. Not to mention that there are a lot of risk ahead that we are seeing right now. Right now, there is escalation of Middle East war. Iran has just fired 200 ballistic missiles at Israel. And Israel has repeatedly said they will strike back and strike back fairly hard at Israel. And this time around, it will be certainly a major escalation. Iran has outright said that, if you hit us, we will hit you back. So both parties have said that I will slap you, you will slap me. And this is clearly a very dangerous case of escalation. If this conflict does escalate, then oil prices will shoot up. oil prices has already escalated. We're now above $70 per barrel, and we certainly are very worried that this if this thing were to break out, then they will have a hit on the S&P 500 and the stock market. Not to mention, we have a very neck-to-neck race between Kamala Harris and Donald Trump on the presidential election. First of all, they are so close to each other, we don't know who's going to win. We're not even sure when who wins will be good for the stock market. I think there are people who say that if Donald Trump were to win in the short run, it'll be good for stock market. In the long run, it'll be bad for stock market. That's because he's going to maintain some corporate tax rate cuts. But the things that he's going to do, like imposing a trade war on China and things that will cause inflation to spike up, and therefore driving interest rate up. So that is bad for stock market in the long run. And on the other hand, Kamala Harris promised that he will increase he will increase corporate tax rate, and that will cause the stock market not to do quite well in the short run. But what she is going to do in the long run will be good for the stock market, as it's not inflationary. So this is hearsay, desktop research and things like that. We don't know who's going to win, and we are not even sure who wins is good for stock markets. So there's a lot of risk ahead from the US presidential election. And right now, the US recession risk seems lowered now, but the reinflation risk seems slightly higher because there's a tight job market right now. And then it alternates, sometimes recession risk is high, sometimes reinflation risk is high. And these both are equally scary to the stock market. Plus, there are other points that comes along, that scares us. So to say that, the road ahead towards 6,000 points is going to be a for sure outcome is something I'm not too sure about it. This is a nice segue to talk about Chinese stock market because recently it's gone on an incredible spike. For those people who said I analyzed wrongly and things like that, I'll just say this. I've always said that the Chinese stock market is a gamble. Right? Gamble means that sometimes you could lose, sometimes you could win. And the Chinese stock market is something very difficult to predict. For those people who have made money, congratulations to you. For those people who think that you predicted this Chinese stimulus package that has come out, I'm just so impressed that, you have the foresight of divinity to be able to see this happening. I'll just say this. The current stock market spike is a reaction to the possibility of an economic recovery. And the economic recovery has no sign of happening yet. But of course, right, it could happen. I'll just say this on the economic front that there is a strong chance that the monetary policy will fail, not because Mr. Loo says so or wish it so, because this has strong signs of a liquidity trap that what we've seen in the Great Depression and also in the Japanese economy during the 30-year recession. But what would be really helpful if the monetary policy is supplemented by powerful fiscal policy as well, where the government actually spends a hell of money in uplifting the economy. So the combination of two of them would be very powerful. If this were to happen, frankly speaking, I'm going to be very happy because Singapore economy is highly dependent on Chinese economy as well. If the Chinese economy do well, the Singapore economy will do well as well. I would certainly wish this would happen. But let's watch and see and see whether this is just a spurt and fall like what it has been in the past, or this will be a sustained recovery. We don't know, and this is still a gamble in my opinion. As what Adam Khoo says, in his video, which I watch, with a lot of interest, he's not going to add any more investment in the Chinese stock market. Is because it now lacks predictability, and he's going to focus more on the US market or so. This is what I see it is. It is difficult to predict. I'm not going to touch it. I'm more conservative. Some of you are good in analyzing the stock market. Good for you. You can predict what the government of China is going to do, and wouldn't you take this gamble? Good for you. Okay. So with this, thank you for watching. Okay. And I hope to see you in a day or two. And remember, like, subscribe, and join my Telegram channel as well at Loo1165. And may you do well in the stock market investment, and may the S&P 500 hit 6,000 points, and we all celebrate together. Thank you, and goodbye.